Today's topic, a trading edge, a systematic trading edge. You guys were asking, what does that say? Buying green and selling red. So we're going to talk about philosophy of ranging market. It doesn't show up that well, does it? But here you can see buying green, selling red. Ranging market versus trending market. Like, what do you believe? How do you incorporate that in your system? How do you have risk control? This is something I believe now is, and I'm going to explain why, but let me explain the journey of getting there. I've traded a lot of strategies, I've traded a lot of systems, and some work well, some work less well. Most only work certain times, some don't work all in this situation, others work in that situation. And I've definitely traded like mean reversion systems. Mean reversion systems, there's a sharp red candle and you buy because you think it's going to wick back. There's a sharp green candle, you sell because you think it's going to wick back. And I am a fan of mean reversion, trading reversals, personally on a higher time frame though, with more confirmation. It's too hard to execute as a human, but what I really believe though is that, okay, what I'm saying for a rule, here's a systematic edge. I have many systematic edges. You can only, if the previous day was green, you can only be long today. If the previous day was red, you can only be short today, with rare exceptions. I'm not going to talk about those exceptions because that's not the point, right? I'm just talking about one particular edge and what I believe. So now, if you only buy green and you only sell red, you are going to lose money when the market's alternating green and red days. Now, obviously, your trading system is more than yesterday was green, I'm buying, yesterday was red, I'm selling, right? But imagine that's it, right? So you're gonna, in these ranges that last a long time at times, and they just chop back and forth, you're just gonna buy the highs, sell the lows, buy the highs, sell the lows. And during that, depending on what you believe, it feels like it could last forever. It becomes very frustrating, and you think, you know what? This isn't for me. I'm going to I'm going to buy red, I'm going to sell green. I'm going to sell the top of the range, I'm going to buy the bottom of the range. I'm going to set limit orders, however I'm going to do it. And it can work, but here's the issue. There are times, you look at any asset on historical price action, especially risk assets, depending on the Forex pair, if it's a major Forex pair, it might not trend as much. But in general, if you go to a daily chart and zoom out years, you're going to find that there's times when there's 10 straight green days. There's 12 straight red days. And think about this. What happens in those situations when you're allowed to buy when the previous day was red? And there's 12 straight red days that go lower and lower and lower. Possibility of losing a lot of money, taking a lot of losses or taking a really large loss. What happens when your system allows you to sell green days when there's 12 straight green days, right? You could blow up depending on how you manage it. Now, what happens if your system is to buy green days that close at the high of the day, and there's 12 straight of those? You make 50R, you make 100R, right? During that pays for everything. Or if there's a move down and there's 10 straight red days and your system sells red days and you sell 10 straight days and then you get stopped out, whatever, hits TP, or there's a green days, exit signal, you make so much, right? So the question is, do you want to make money in the ranges and lose in the trends, or do you want to make money in the trends and lose in the ranges? So for my choice is to make money in the trends and lose money in the ranges. And I like it as a risk control. I can try to jump around and find the asset that's trending, but it saves me from taking these monster losses that can occur, right? If you have this mean reversion system, at times you can have like a super high win rate, but low RR. But then you have some huge loss or some huge series of losses that comes in because the market starts trending and your system is okay selling the green days, but there's 10 straight green days. Or your system is okay buying the red days, but there's 10 straight red days, right? So those are the tail events, and it's important to think about how does your system do on the tail events. On the tail event, do you make money or do you blow up, right? I personally want to make money on the tail events, on these rare price occurrence where these strong trends develop, and they're not really that rare. Typically, for any particular asset, they're happening a couple times a year. And then if you trade a lot of assets, you can catch a couple of these every month, right? Potentially. Not every day, right? Not every day. If you're trying to make money every day, well, you could probably make money every day buying green, selling red, depending on what your system and all that various things you have. But yeah, I just want to push back. If you think I'm wrong, push back on me. I'm doing this for my own, for me as much as for you. It's free education, right? But I'm very much of the belief that it's not a huge edge to buy green. The previous day was green buy and the previous day was red to sell. It's like a philosophical choice, and it's a risk management choice as much as it is a system edge, right? Because again, risk management, you can, if you're getting sell signals when price just goes higher and higher, you have to turn the system off, right? I don't want a system that I have to turn off and on, right? So that's it. Comment, what do you think? Much love and peace.